everybody. Welcome to the Trading Market Technicals morning call video for Thursday, February 7th. We did get a pause consolidation day in the markets yesterday. Dow up 7, Nasdaq down 4, S&P up 0.83%, and we had the dollar up about 22 cents. What does that tell us? That basically tells the markets are consolidating at the upper end of the range, and one way or the other, the markets are going to break up, and obviously it looks like it's going to break to the upside. But we are due for a pullback. We've been saying that for I don't know how long, and I think a lot of market participants are looking for pullbacks as well. And when a lot of people are looking for it, usually doesn't happen. It comes by surprise. So we need to be on our toes. We need to be nimble. Nothing really has changed from yesterday's video or the last couple of days actually. Markets have been chopping around at the upper end of the range. Outside day reversal will come back. They take back the gains, take back the losses, and now we're just sitting here pausing. And I think looking for a little bit more direction to see if this market can actually rally and break up to that 1525 area. That would be your first upside target in the S&P cash. Next would be 1550, and then the ultimate high at 1575. I do think the markets are extremely overbought, but again, overbought isn't a sell signal to get out there and just sell the markets. We want to see key evidence that markets are breaking down, breaking pivotal lows, and making lower lows in price. So that's what we'll continue to watch. In the meantime, we continue to look for best trade setups. I think intraday trading right now would be the best way to go. Overnight risk in the markets can actually be down 20-30 handles by a spook in Europe. Hence the little bit of nervousness we had in Spain early in the morning, I think on Monday, and we had a nice little sell-off, and then the markets took it right back the next day. So we definitely going to be needing a catalyst to see if this market can sell off to the downside. Until then, trade the best setups. When in doubt, cash is a position. Back off and wait till you see something that's relatively easy, something that looks ripe for a setup, and then trade it that way. That's what I'm doing. I'm not holding any long positions, and to me, I'm just waiting for the right moment to look to get aggressive, whether it be short or get aggressively long again. But I'm not holding anything until this market can correct itself at least 3 to 4%, and then we can look to really get long that way as well. We do have some economic data today, which I'm sure is going to be watched closely. Initial jobless claims, that's going to be a big one every Thursday morning, 8:30. And then we do have consumer credit coming out at 3 o'clock today. Again, the economic data was kind of light, so really it's based on any kind of event-driven news and or, of course, the technicals in the markets. And the technicals are reading overbought, but again, we just need to see price confirm that reading by making lower lows and lower highs before we actually enter some shorts. We do have some key levels that we're watching in the transportation sector, and of course the S&P, and I want to show you that in a moment. But I'm going to just run through real quickly. Nothing has changed here, guys. I want to just show you the copper. Copper broke out of a symmetrical triangle, now pulled back a little bit, and just kind of consolidating here. Sort of a bull flag pattern. If copper does get moving to the upside, and we get to that 4-ish area, that's really that number is going to be 4. That'll definitely help the markets continue to move higher. But until then, I'm just going to take a look at some key areas, which would be copper. Obviously, the dollar is a very important indicator here, and the dollar did have a nice little move higher. However, we do have a head and shoulders pattern here, right? Left head, left shoulder, right shoulder, and the neckline coming at 79. Again, everybody sees this pattern. So it could very well be that this pattern becomes negated and the dollar starts to move higher and really starts to rally. And if that does happen, that will definitely hamper any kind of rally going forward with the S&P. That obviously, as you know, is an inversely correlated effect with equities and commodities. So if the dollar does rally, markets can actually start losing momentum and start breaking down. Again, only because that a lot of people see this pattern. Now that doesn't mean that it can't happen, but only a break below the neckline and then the back test and then a move lower. That would entice me to say, okay, dollar is officially breaking down and markets are going to move higher and at least test the highs. Okay, that's the dollar. Let's take a look at the 10-year. 10-year broke out of the symmetrical triangle and now starting to break higher. 10-year, obviously, bonds are coming, money's coming out of bonds, driving yields higher and driving markets higher as well because money's getting put into equities. Now, this is not going to be in effect for any time soon, but if yields really start to rise and start to really get attractive, people will start putting their money back into bonds, treasuries and what have you. However, that's going to be quite some time. Just wanted to show you what this is looking like right now in the 10-year. Now, take a look at stocks above the 50-day moving average. Again, 89. It's been shopping around 80, 90, 91%. Very, very high. Again, these are sell signal territories in the market, but we have to have price move lower to confirm this. Okay, as you can see here, every time we dip, we got to buy. And every time we hit these levels, we had some sell signals here. Okay, stocks above the 200-day moving average as well. As you can see here, we're at these lofty levels. Again, almost every indicator that I've mentioned to you and I showed you are at overbought readings and really through the charts. So eventually, markets will move lower. It's a matter of when, and that's when I say discipline comes in, especially in this type of market, because you can really get hurt here if you're not following your trading plan. The first thing that you want to look for is price moving lower, making lower lows, and then, of course, our overbought readings will confirm what price is doing. Remember, these indicators are lagging to price. Okay, NYMO, Cleveland Oscillator, really not doing much, just chopping around here, negative 17, plus 23. And again, this basically tells me whatever direction this market's going to move forward, either move higher or lower, has plenty of room to run before it gets overbought. And if the market is going to sell off, plenty of room move lower before we get officially oversold. Okay, so that's actually a good sign. Now, EEM, which I want to show you, and this is obviously the emerging markets ETF. And let me just bring this up a little bit. And as you can see here, we have a symmetrical triangle breakdown. We did catch that 50-day moving average in the emerging markets. So this looks like, to me, another warning sign. If the emerging markets aren't moving higher, right, we're just basically one world index, then you got to be careful. And this, relatively to the S&P, our ratio chart, you can see down below, is obviously falling lower. So something to keep an eye on and watch. When we were here at the November lows and emerging markets are moving higher, that's great. Now, the S&P's moving higher along with our indices, they're moving lower. So something to keep an eye on. Again, not a sell signal, but this is definitely a red flag and warning sign. All right, now let's go into the charts. What I have here is, and I like to look at this at least once a week, and I don't put it out every single day because there's no reason to, but I have the four main topics. I don't have the Dow, but S&P, NASDAQ, Russell 2000, and the Dow Jones. Dow and the Russell are clearly the two leaders. You could even add the NASDAQ, S&P, and Dow are the laggards. And I want to see if the leaders are leading, doing their job, and they are, right? We have the Russell 2000 up here in the lime green. We have the Dow Transports in the pink, and then of course the S&P and the NASDAQ. NASDAQ is lagging, obviously, because of Apple, but it's doing its job, and that's something that is a positive. The long-term objective, big picture in the markets are positive, the longer-term picture. So I see nothing wrong with the long-term picture. The short-term picture, obviously, markets can't go straight up because if there is some sort of a news event, a driven event that spooks the market, there's going to be a pretty nasty fall. Not that it's going to happen, but it can happen, and that's why when markets run up, pull back, run up, pull back in wave patterns, it's actually a healthy correction, a healthy way of the markets moving along, chugging along ahead. It's like a runner. Runner can't just run straight for 10 miles without at least pausing and pulling back. Same thing. But anyway, leaders are doing its job, and we now will just watch and see if this market, if these leaders are going to start to roll over. Okay. Now, Spiders Daily, as you can see here, we've got a little bit of momentum kind of starting to slow down a little bit. We did have decent volume on yesterday, but yesterday markets actually sold off in the morning briefly, then caught a bid, and then just grinded higher again. Another ho-hum day, but again, looking for your best setups, preparing yourself for the day, and obviously preparing yourself for the next trading day while you're not doing any trading is ideal right now in this situation. Trust me, the volatility will come, and we will be picking up as far as trading activity is concerned. But you want to be limited to getting beat up during the day and then worrying about it, because when the market does turn, you're going to be shy and nervous to do anything, and that's not what you want. So keep the palate dry. Believe me, it will come. So the spiders, quickly. Down test. This low here is going to be that 149.40 is going to be that pivotal low that we're going to be watching. And this is something that I have written down, looking at my desk saying, okay, this is going to be the spot. We break below this on a closing basis, then we might have some upside momentum, some downside momentum, and at least correct a little bit. Okay? This is the 60-minute chart. And the reason why I showed this to you, had a couple of good calls yesterday as far as conversation. A couple of traders saying, hey, I'm looking to get short, and I said, why? Reason why. Look at the 60-minute chart. A quick little tip. 5, 15, and 16, 5, 15, and 60-minute spiders, have them stacked up above one another, and take a look at what it's doing. A 5-minute chart could be giving you a buy signal, where a 15-minute and a 60-minute chart could be working on sell signals. So if you're looking for a 5-minute buy signal, then you're going to have to take it just as that, a quick little move. Look for 10, 15 cents. However, if all of our charts are in sync, then you can look for a real big move and start looking for the markets to buy. As of right now, here at the end of the day, the last 3 hours of the day, here is our buy signal right here. Catch the 20-period moving average, and that was it. After, when it broke out of the 150.87, there was no reason to look for shorts, unless you have a stock that has relative weakness to the markets that really is not going to matter that the market goes up. Hence, maybe a bad news, a downgrade, a big downgrade from a tier 1 firm. But there's no reason. If you look at this, this is going to keep you out of trouble during the day. Okay, and this is the 30-minute S-Spiders, just showing you the Bollinger Bands, 30-minute. This is a real good indicator. We're starting to pinch again. That means that another move is coming. It unfortunately doesn't tell you what side of the move is going to be, either up or down. But you can really get a good idea that if the markets are going to break higher, right, if they're going to take out 150, 130, obviously it's going to be to the upside. So keep an eye on here, but I could see the next couple of days we're going to get some sort of a breakout in this consolidation area. And this is our ATR, average true range, versus the S&P. We're starting to tick a little higher. That means that we're starting to see a little bit of volatility. And like I said, we had one day up, one day down, one day up, and then an inside day. Right? So now we have this market here is really just sitting here looking for some sort of a move. And what the move is going to be, obviously nobody knows. But if we can get a little bit more good news, maybe today with our consumer credit or initial jobless claims, they may pop this up, and we look for the 15.25 and 15.15 area. But we are starting to get a pickup in the ATR, and as you can see, every time we move up, the markets move down. Every time we move down, the markets move up. So it's something to really keep an eye on here. I want to show that to you. We'll keep that in mind. CCI index starting to roll over. As you can see, all of our momentum indicators are starting to lose its luster a little bit. Inside day from the previous day. So to really break out, we got to break out of that 15.15. 15.15, we tested it a couple of times. As you can see, we really tested it pretty much all week. If we got to take out 15.15, and the low would be that 14.96 area right there. And as you can see here, that's going to be the area. 14.96, 15.15. We've been in a range for 4 days. And as you can see, we're just consolidating, taking back the loss, taking back the gain. So bottom line, 15.15 or 14.96. If we take out 15.15 on a closing basis, we'll have new order flow, new money coming into the markets, and that's going to push us higher. And or, again, 14.96. Push us low. The only thing that kind of scares me is that we do have a lot of new longs coming into the market, and we start to break down here, we can really start to move lower. Okay, S&P 60-minute chart here. We had that bearish rising wedge. We broke out of it, broke back in it again, and we're just kind of chugging along, holding here. First pullback would be I'm looking for is going to be the 1470-ish. Lower trend line here, probably now moving it back up to about 1460, 1470. That's going to be our target, 38%, right up in here now, since the markets are kind of moving up higher. So our first target on our move lower would be a 1470-ish area. Okay. Now, double top on that 30-minute S&P. We're still kind of breaking down here, and here's your areas: 1496, 1515. Keep an eye on it. Double top. We did pull back, and we just kind of, as you can see, look at the choppiness here. It really hurts a lot of the traders here if you're not cognizant about what's happening in price. So again, take selective trades, and when in doubt you don't see some, just take a step back and start doing some research and start preparing for the next day until something really happens here. But as you can see here, we're just chopping around. Big range for the last, I don't know, 6-7 days. Okay, and this is the IYT, the transportation sector. This could very well be the top, the 105.75 here. I'm looking for this move lower. 102.35 is going to be the break and close to kind of confirm that would help the markets move lower. Obviously, the transportation sector moves lower. And you can see here our momentum indicator starting to move lose its luster. So, again, we need to really see now. We got to have the markets confirm what we're seeing. We have warning signs all over the place, but that does not mean to go out and sell the market. I'd rather see price break, a little bit of a back test, and then look to get short. That's going to be your ideal situation when you're looking to short the market. Diamonds here, just the Dow Jones ETF, just sitting right above here, below the trend line, but really hanging in here. So again, another inside day, and the Dow is actually holding up pretty well, and we're still overboard here, still above the 80, and MACD's starting to curl a little bit, but that doesn't mean that we can't move higher. Okay, Russell 2000, one of our leaders, really looking good, in good shape here. Again, consolidating, and this is a bullish configuration here. If you're looking at, oh wow, we're just looking for another break lower, think again. I mean, when you're sitting here consolidating the upper end of range, that's bullish. That's not a bearish pattern at all, to say the least. So just keep that in mind. We need to really break the low here. I want to break the 20-day moving average and then really get excited. But again, all of our inverted head and shoulders patterns hit our targets from December. So let's see what happens now and see if we get another big break up, or if the markets can confirm that we start to break lower again. Now, we do have a big event today too. We have ECB rate decision. European Central Bank. That's going to drive the euro, and the euro will actually drive a risk-on or risk-off sentiment. So that's going to happen early this morning. So really keep an eye on that if you guys are trading for the day. All right, now Apple. Interesting development Apple yesterday had. We had rumors that Apple will be increasing their dividend and doing a buyback. If that happens, I could see Apple move easily 100 points to the upside in a matter of days. Now, what happened was it was a rumor. So Apple actually rallied up 7-8 points, and then look what happened. Just rolled right back. That's why rumors should be treated as rumors. Only rumors. So just keep that in mind. But they're supposed to be announcing this at the Goldman Sachs Tech Conference. If that happens, then I think that that's what you need, a positive catalyst to get involved in Apple and really start to break higher. Now, if that does happen, if that does not happen, it's going to be back to the same old grind. You know, Apple really just a day trading stock here. Okay, but just keep that in mind. Watch it, because if we do get a good positive catalyst and we can break higher here and hold above this range, then Apple could actually may have changed and actually turned around. But we need evidence of price moving higher, breaking higher, and breaking these pivotal highs here, all right, before we really want to start accumulating position, all right? But other than that, just a rumor for now. But I'll keep you posted on the Apple. And lastly is the Qs, right up in this area here. We're just sitting around and consolidating. A break above the Qs, again, at 67.80 would have tech moving higher. Again, Apple is being... our Qs are being held hostage because of Apple. All right, guys, listen, have a great day today, and we will talk to you tomorrow. Take care.